As of April 19, 2025, the United States-China trade war has intensified, with both nations imposing significant tariffs on each other's goods, leading to widespread economic implications. U.S. tariff measures. President Donald Trump's administration has escalated tariffs on Chinese imports to an effective rate of 145%. This includes a 10% general import duty and additional reciprocal tariffs on specific goods. The tariffs target a wide range of products, aiming to address trade imbalances and concerns over fentanyl exports from China. Certain electronics, such as smartphones and computers, have been temporarily exempted from these tariffs. However, the administration has indicated that tariffs on semiconductors and related electronics may be introduced in the coming months. China's retaliatory actions. In response, China has increased tariffs on U.S. goods to 125%, matching the U.S.'s reciprocal levy. Additionally, China has implemented a 34% blanket tariff on all U.S. imports, effective from April 10, 2025. These measures are part of China's broader strategy to counter U.S. trade policies. Impact on businesses. The escalating tariffs have significantly impacted businesses in both countries. U.S. Many small businesses report increased costs and supply chain disruptions. For instance, Mark Boker of Alter Ego Comics in Ohio notes that tariffs have caused supplier costs to rise by up to 34%, reducing profit margins and leading to higher prices for consumers. Chinese manufacturers, Chinese factories, such as Danny Lau's aluminum coating operation in Dongguan, are seeking to expand their business beyond the U.S. due to decreased demand from American clients. Lau is exploring new markets in the Middle East to offset the losses. Consumer impact. Chinese fast fashion retailers Temu and Shein have announced upcoming price hikes for U.S. consumers, effective April 25, 2025. This is due to the elimination of the de minimis exemption, which previously allowed tax-free shipments under $800. Both companies have also reduced their U.S. advertising spending in response to the tariffs. Outlook. While President Trump has indicated a willingness to negotiate, he has also suggested that further tariff increases are possible if China does not address U.S. concerns. Analysts warn that continued escalation could have broader implications for the global economy.
The Chinese economy is going to be probably at least twice as big as the U.S. economy. Maybe 3 times, but at least twice. And that assumes a GDP per capita still less than the U.S. But since they have about 4 or 5 times the population, then it would only require getting to a GDP per capita of half the United States for their economy to be twice the size of ours. The foundation of war is economics. And so if you have half the resources of the counterparty, then you better be real innovative. If you're not innovative, you're going to lose. So in the absence of radical innovation, the U.S. will be militarily second.
As the economic chessboard between the United States and China continues to shift, the world remains on edge. The latest chapter in the ongoing tariff war underscores not just a bilateral power struggle, but a global reckoning with the future of trade, technology, and influence. With both nations imposing new duties and tightening restrictions, the ripple effects are already being felt in international markets, manufacturing hubs, and household economies worldwide. As a correspondent closely following these developments, it's evident that this is more than a clash of tariffs, it's a battle for dominance in a rapidly evolving geopolitical landscape. What remains to be seen is whether diplomacy will prevail or if the standoff will deepen, further straining the global economic recovery. We'll continue to monitor and report on every move in this high-stakes game. For Pulse World Watch, reporting. Stay informed, stay aware.